This hearing is entitled Strengthening U.S. Leadership in a Turbulent Global Economy. Before I go into my opening statement, we have been given notice that they are expecting votes on the floor sometime between 2:20 and 2:35. I would suspect that means 2:55 to 3:05. I don't know, hopefully not. But hopefully it'll be more like 2:30. And we have one vote, a rule vote, and my intention is to take that quick time and have us all go vote and then come back so that we can finish up. I don't suspect that we will be having gotten through everybody at that point. So with that, I'd like to recognize myself for 3 minutes to give an opening statement. You know, the dictionary defines turmoil as a state of confusion or disorder. Fortunately, that's the state of the global economy right now, it seems. For instance, for more than 3 decades, China has claimed an average annual GDP growth of over 10%. However, in the last 3 years, it has seen growth of less than 8%, and the government has announced that it's now struggling to meet a target of 7% for the year. Last month, the People's Bank of China announced a surprise devaluation of the renminbi by 2%, sending major stock markets in Asia and Europe down and sparking fears of additional exchange rate devaluations in other countries. It was the largest devaluation in China's system in over 20 years. In the weeks following the devaluation, however, China spent up to $150 billion in foreign reserves to prevent the currency from sliding even further. Additionally, the MSCI Emerging Markets Stock Index has fallen by more than 15% since July, with Brazil's credit rating now cut to junk status. Europe is also in dire straits. This month, the European Central Bank announced a new round of quantitative easing. Meanwhile, concerns over Greece and the euro's future continue. In each of these cases, a slowdown has been precipitated by unsustainable debt and ill-advised government intervention in the economy. For years, China had depressed the value of the yuan to fuel its exports, only recently allowing its value to rise. Meanwhile, easy credit led local and regional governments to amass nearly $4 trillion in debt in China. With little ability to find productive investments at home or abroad, the Chinese have created speculative bubbles in real estate and stocks that now only are beginning to deflate. Europe, meanwhile, sees no end in sight to Greece's downturn, which continues to threaten the integrity of the entire Eurozone. This summer, Greeks fell nearly $2 billion in arrears to the IMF and had to close banks to prevent capital flight. After negotiating a new rescue with Eurozone governments, many of those voters who strongly opposed further bailouts, the country now has announced elections that may undermine its ability to carry out those reforms that it had just passed and accepted. This combination of debt and misguided policy abroad provides the U.S. with an opportunity to reorient international priorities. 3 policy debates are of particular relevance to the Monetary Policy and Trade Subcommittee. First, inclusion of China's RMB in the IMF's basket of elite currencies. Second, the IMF participation in the next European bailout of Greece. And third, the Trans-Pacific Partnership and its role in expanding rules-based trade overseas. This hearing will explore these matters and some others and urge the administration to advance a, quote, back-to-basics type of approach to economic policy, one that emphasizes fiscal responsibility and free markets. And with that, I yield back the end of my time. Chair now recognizes the ranking member of the subcommittee, the gentlelady from Wisconsin, Ms. Moore, for 5 minutes.
Well, thank you so much, Chairman Huizenga and members of the committee, and want to welcome you, Undersecretary Sheets. Mr. Chairman, this is absolutely a subject that deserves our close attention, and I want to thank you for convening this meeting here today. We are increasingly in a global world, for all that means, both good and bad. And one extremely important thing I think that this Congress can control, although we cannot control everything, is that we could make immediate, tangible, and lasting impact on the prestige and confidence of the U.S. global leadership. And that would be that we should immediately ratify the new IMF quota system. Mr. Chairman, I just learned, breaking news, that Chairman Yellen has announced that there will be no interest rate hike as of right now. So that's really important news. But I think that one of the things that we could do right now is to ratify this new IMF quota system. There's consensus agreement that it is the rational move to make at this time, and there's no reason that we have not yet acted. U.S. leadership and engagement and economic policy is vital to the long-term interest of our country. Global economic stability, as we all know, smart geopolitically. Congress's lack of action has hurt the U.S. standing internationally. Further delay even makes less sense. And as the chairman has pointed out, China has made a lot of movements to fill a void, and we need to take action in this Congress as well. I know that some have sought to tie approval of the quota system to other IMF reforms, but I respectfully disagree on that point. The quota system should be approved, and then we can talk about IMF reforms. U.S. good faith engagement in these multinational organizations is extremely fruitful, as we can flex soft power and accomplish goals that are simply not realistic or counterproductive with the use of force. And I yield back the balance of my time.
Gentlelady yields back. With that, the chair recognizes the gentleman from Minnesota for 2 minutes for an opening statement.
Mr. Chair. Thanks for holding this important hearing. With the backdrop of Congress passing Trade Promotion Authority and U.S. trade representative negotiators laying the groundwork for historic trade agreements with Europe and the Pacific Rim, I'm concerned that our nation's interest in promoting and securing trade agreements, which are certainly important to both our economy, economic opportunity, but also to our national security, may collide with our sovereignty and other legitimate interests. Sluggish growth and the debt crises in European Union member states and the devaluation of China's currency threaten current market stability and pose serious risks to future multilateral trade deals like TPP or TTIP, as well as the insurance and regulatory frameworks that will comprise these agreements. I look forward to hearing the Undersecretary speak to how the U.S. is exercising its leadership in ensuring or to ensure our sovereignty, such as my home state's ability to regulate its insurance market. Further, I'm particularly interested in what the Treasury is doing to leverage U.S. influence when it comes to the International Monetary Fund's consideration of the RMB as a basket currency, its systemic exemption policy, terrorism financing, remittances, and global bailouts. Mr. Chairman, thank you for calling this hearing again, and I yield back.
Gentleman yields back. And today we welcome the testimony of the Honorable Nathan Sheets, Undersecretary of the Treasury for International Affairs. Mr. Sheets has previously worked as Global Head of International Economics at Citigroup. He has also served for 18 years at the Federal Reserve in various capacities, and from 2006 to 2007, was a senior advisor to the U.S. Executive Director at the IMF, the International Monetary Fund. Mr. Sheets, without objection, your written statement will be made part of the record, and you will be recognized. But I should also mention that one of our members has taken great pleasure in getting to know and talk through local streets and restaurants and all the good stuff you're growing up in Mesa. So Mr. Schweikert is very pleased to start claiming you as one of his own. Before you went, so growing up there, and then you were off to BYU, I believe, for your BA, and then MIT for your PhD. So, and I just want to, yeah, too many letters. Sorry, Mr. Mulvaney wasn't following how many letters, but but I do want to say thank you for your time and attention and your ability to be here today. So that you're now recognized for 5 minutes to give your oral presentation of your testimony.
Thank you. Chairman Huizenga, Ranking Member Moore, and members of the committee, thank you for the opportunity to testify today to discuss Treasury's role in promoting global economic growth. Earlier this month, I joined Secretary Liu at the G20 finance ministers and central bank governors meeting in Ankara, Turkey. Discussions at the meeting focused on the recent turbulence in global financial markets, particularly in China, as volatility in its equity and currency markets has spilled over to markets globally. Fears of a slowdown in China have also raised concerns about the global growth outlook. Commodity producers have been especially vulnerable to lower Chinese demand. We discussed ways to boost global growth, including through strategic infrastructure investment and structural reforms, as well as the need to continue to strengthen financial, supervisory, and regulatory practices to reduce the risk of financial crises. As has been widely noted, the Chinese economy is undergoing a difficult but essential transition that, if successful, will make growth there more reliant on domestic consumption and less reliant on exports and investment. The Chinese government has laid out a comprehensive set of economic reforms to move toward a more market-oriented, consumer-driven economy. These reforms are largely consistent with what the United States has long advocated. To ensure that the transition is managed in an orderly way, China must transparently communicate its policies and actions and allow the market to play a primary role in determining outcomes. Treasury has had sustained and robust engagement with China on its policies, including in the economic track of the strategic and economic dialogue. In light of recent developments, we are encouraging the Chinese authorities to accelerate the implementation of their reform agenda, while underlining that to bolster effectiveness, these reforms must be implemented in an orderly and transparent manner. Turning back to the global arena, our partners look to U.S. leadership to help formulate the international agenda, and we in turn rely on the international financial institutions to provide analytical, technical, and financial support to identify vulnerabilities, advance reforms, and smooth adjustment. The IMF has played and continues to play an important role in providing assistance to key strategic partners of the United States. For example, in Ukraine, the IMF is currently supporting a program that aims to bolster the Ukrainian government's extraordinary reform efforts. The IMF has been a key partner in Europe's efforts to fight crisis in the region, preserve the integrity of the euro area, and frame a reform program for Greece that includes necessary adjustments, encourages growth, and puts debt on a more sustainable path. The United States and the IMF are actively supporting the need for further debt relief for Greece now. To ensure that the IMF remains at the center of the multilateral economic system and that we maintain an important voice in it, the United States should promptly approve the 2010 quota and governance reforms. Our interest in strengthening the fund is based on hard-won experience that a well-resourced and effective IMF is indispensable to achieving our economic and national security interests. The proposed reforms are designed to strengthen the fund's finances while preserving the U.S. veto by a comfortable margin. The Treasury Department also fosters growth and prosperity by working in partnership with the multilateral development banks, including the World Bank and the regional development banks. Like the IMF, the MDB's purposes firmly align with the interests of the United States, and they are vital tools for promoting security, economic growth, environmental sustainability, and poverty reduction. Finally, the administration's trade agenda is also essential to our efforts to promote prosperity. We are working to secure a final Trans-Pacific Partnership Agreement, or TPP, that unlocks export markets, establishes strong rules, and bolsters economic growth at home. TPP promises to help U.S. businesses reach customers in the world's fastest-growing region, deliver more and better jobs in the United States, and elevate trade and investment standards, including on transparency, fairness, innovation, labor rights, and the environment. And we very much look forward to continuing to work with you on these objectives. Very happy to take any questions.
Right, thank you. Appreciate that. And the chair now recognizes himself for 5 minutes. And Mr. Sheets, I think it's difficult to find anyone who argues for the continuation of the IMF's systematic exemption to its exceptional access framework, which bailed out Greece creditors without restoring economic growth or competitiveness to the country. But we keep getting mixed signals from the administration on this. In an August 31 letter to me last month, Treasury said the systemic exemption was, quote, important to the IMF's role in providing support in the most difficult crisis cases. But when Secretary Lew testified here in June, he said in response to one of my questions, quote, I think exceptional access has serious questions. I've never pushed back on the kinds of questions you're asking, in other words, questions about eliminating the systematic exemption. And I'm open to, and again, he's saying, I'm open to a serious conversation about it. I think looking forward, finding a way for the IMF to avoid having to use tools like that is in all of our best interests, and I'd be happy to have that conversation. That was Secretary Lew. Previously, in fact, just last month, the IMF's former chief economist said, quote, the reforms now being discussed at the fund, namely the wider use of the debt reduction, rescheduling option, and the elimination of the systemic exemption are really important. In fact, even my good ranking member had said that she was, quote, entirely open to considering the case for IMF reforms, which I'm happy to hear. But Secretary Sheets, isn't it time to get rid of the systemic exemption?
So this is an enormously important issue and one that's also particularly salient. Clearly, my sense is that given where the world was in the spring of 2010, that using the systemic exemption was the right thing to do, that there were severe spillover risks if Greece or Portugal or Ireland had been required to restructure their debt in that environment.
But you would admit that they basically bent the rules or ignored the rules to make all that happen, correct?
It was, the decision was made in accordance with the powers of the IMF Executive Board. And the IMF Executive Board very much felt that moving toward a debt restructuring in that environment would be inappropriate. So they established mechanisms that allowed these programs to go forward.
I can take yes for that as an answer, but what about going forward?
Right.
I mean, we know what happened in 2010, but it's the going forward, and I think there's a number of us that are concerned about IMF future bailouts of Greece, as they are very concerned.
And as you indicate, there is a very lively debate on this issue that's ongoing inside of the IMF. One proposal on the table is to further specify the conditions under which the systemic exemption could be used. But there are also other approaches that are being articulated in that debate. And we very much look forward, as Secretary Lew said, to having a conversation with you and your staff on this issue.
Okay. I want to move on a little bit to the exclusion of financial services in the negotiations, such as TPP and TTIP. I've been engaged in an ongoing dialogue with Treasury over its exclusion of the financial services sector. And as you well know, that is an extremely important thing, a number of important issues, including localization of information and a number of others. To date, your colleagues at Treasury have offered varying rationales for why Treasury refuses to support strong rules to ensure foreign investment. Foreign governments do not impose such restrictions. But I'm very concerned that it's going in a different direction. I've weighed in on this issue. The Ways and Means and Finance committees have weighed in, calling on you to, not you, and you collectively, to eliminate such localization requirements for all sectors, including financial services. Does the administration, and particularly Treasury, understand that the current discriminatory approach to addressing localization barriers will jeopardize existing support for trade agreements if it's not addressed?
This is another issue that I personally am working on quite intensively. Over the last 6 weeks or so, I've had the opportunity to speak in some detail with our various regulatory agencies as well as with USTR and the State Department on this. And the sense that we get is that in pursuit of financial stability and soundness of institutions, it is absolutely imperative that the regulators have unimpeded access to various books and records associated with the operations of foreign institutions in the United States. And it is not clear if these institutions are not required to have books and records actually in the United States, that the regulators would have that unimpeded access. So it is a matter of regulation, it's a matter of supervision to ensure that these institutions are safe and sound. It's also a matter of law enforcement, so there are a number of issues at stake here.
My time has expired. With that, I recognize the gentlelady from Wisconsin for 5 minutes.
Thank you so much, Mr. Chairman, and thank you again, sir. I was searching all over for it, but in your testimony, you talked about the importance of the United States paying its share to the IMF, and I think I referred to that in my opening remarks. Other countries have developed other institutions to sort of get around the IMF because of our lack of participation. Could you just give us a little bit, just sort of fill in the blanks of what we could expect if these other multi-national development organizations take off and the IMF and the United States uses its influence in this sphere?
Very, very much as you say, a strong, well-resourced IMF is very much in U.S. National interests, U.S. security interests, and so forth. These are institutions that we led the establishment of 70 years ago. And if we walk away from these institutions or fail to live up to the leadership role that we have, it is at our peril. And one of the risks, as you articulate, is that other countries that feel at present by the governance structure underrepresented could initiate other institutions in which we have less voice, or institutions whose goals and objectives are less consonant with those of the United States. Similarly, as you say, at least arguably, we have seen that over the last year or two with the establishment of the Asia Infrastructure Investment Bank, the AIIB, led by the Chinese, and the establishment of the new development bank known as the BRICS Bank by the four BRICS emerging market economies. So I think the risk that you highlight is a real one, and it underscores how essential it is that we continue to play a leadership role in the IMF. And quite frankly, it is the leadership role that the rest of the world wants us to play. They look to us for leadership. So the quota reforms achieve a number of objectives.
Okay, I was looking through my notes here to try to find out what the yuan, the RMB, is being considered. The Chinese really wanted included in the SDR, and obviously Chinese is meeting the first criterion of being a major exporter, and the second criterion with regard to its having its currency sort of freed up or being free is not being met. But there are indications that they're close. Supposedly, the readjustment on August 10th, and I think I was in China at the time, and their explanation was that they were trying to square it more with the actual market forces. What is your opinion of whether or not this movement, which erased $5 trillion out of the world economy, is in fact, or is not in fact, moving the RMB closer to actual market conditions?
This is a complex set of issues. So on the one hand, they have, through this announcement, incorporated some features into their exchange rate regime that does make the currency more market determined and more market.
Be careful of what we pray for, huh?
Exactly.
We might get it.
They were moving in that direction. But at the same time, it's important that they take these steps in a well-telegraphed, very clearly communicated way. And I think that what we saw in that move was a step toward market determination, but it was done in a way that raised uncertainties about what the objective was. And I think going forward, as China becomes a more market-determined, market-oriented economy, it's going to be imperative that the Chinese authorities take steps to communicate their intentions, their views, and to explain why it is they're doing what they're doing. Had they explained up front more clearly that it was about exchange rate reform as opposed to other kinds of objectives, I think the market response would have been more positive.
Thank you. Thank you. My time has expired. I yield back.
Gentlelady yields back. With that, Chair recognizes the Vice Chair of the committee, Mr. Mulvaney from South Carolina, for 5 minutes.
I thank the gentleman. Dr. Sheets, thank you. We'll move very quickly into the 2012 reauthorization of the Export-Import Bank. The last time the bank was reauthorized, Treasury was obligated by law to do some things, specifically regarding negotiations on export credit facilities overseas in the airline industry. I had submitted to the Treasury some questions for the record after Secretary Liu testified here back in March. Y'all were very kind, by the way, responded. I have the response. First things first, at the end of one of your questions, you said that there was a list attached of your engagements to advance, and that list was, I think, inadvertently left off. If you could give us that, that would be great. In the details, though, that you provided us, you gave us a list of things that I asked you, when have you done this? The law requires you to start negotiations, to begin discussions on getting out of this business of mutually disarming with the other countries that have export credit agencies or facilities, and I asked you to tell me what you had done along the lines. I want to go over some of your responses. One of the things you said was that ahead of discussions at the OECD in March on possible reforms to arrangement guidelines for determining interest rates, Treasury staff held several conference calls with OECD members to advocate a U.S. proposal to make the arrangement's interest rate mechanism more market reflective. You then said you'd met separately with them later in April on the same topic. Not exactly responsive, though. Is it, Doctor? Interest rates not part of the 2012 reauthorization, was it?
If I may, more recently, specifically on the issue that you raised, I've had consultations with my colleagues in the Airbus countries. So both the German Finance Ministry and the German Economics Ministry, the UK Exchequer, and the French Ministry of Finance. So we are in ongoing conversations, specifically on working together with the Airbus.
Okay, let me ask, when did those, you said you met with you met with or you talked with the Germans, the French, and the Britons?
The 3 of those 4 meetings were face-to-face.
Okay.
And the German Economics Ministry was on the phone.
Of those 4 meetings, what was the earliest?
They were all around the time of the Ankara meeting, so it's been within the last three weeks or so.
Last 3 weeks.
All 4 of them.
So after these answers were prepared
Correct.
from my office.
Correct.
All right.
That's why it's not referenced.
I will look forward to another time when I have more than a few minutes.
Yeah, we've been
to go
very
to.
busy since April.
Oh, you would agree with me that a discussion on interest rate mechanisms is not really responsive to the 2012 mandate. You're required to talk to them about getting out of the export credit business, and that's not really interest rates.
Well,
I'm not trying to bait you. It's just not really responsive.
Our sense, though, is if you have a higher SEER, that that will increase the charges associated with going through export credit agencies.
Let me ask it this way,
which will then motivate people to go to the private sector for the lending.
When you met in March and had discussions in April with the OECD participants, did you specifically discuss export credit arrangements?
I wasn't at the meeting and I don't recall, but we did talk about this financing issue.
In another area you talk about, when I ask for specifics, you say in July of 2014, Secretary Liu, you, other senior level officials utilized the U.S.-China Strategic Economic Dialogue to press the Chinese counterparts on U.S. negotiating priorities, and you give me 5 or 6 other circumstances, and you mentioned U.S. negotiating priorities. was extricating ourselves from the export credit business part of our negotiating priorities?
I would say the answer to that is yes, and we've continued those conversations with the Chinese over the last year and a half. I personally have met with officials, including the finance minister of China, folks from the PBOC, and the president of the Chinese Exim Bank, and had those conversations, including mechanisms
When did
to
you meet with the
meaningfully
chairman of
reduce
the
and
Chinese
discipline
Exim Bank?
export credits.
When did you meet with the chairman of the Chinese Exim Bank?
I believe that was in a July visit.
July?
And in July of 2015. And
Why isn't that on the list of things that I asked about?
because this is a response, when is this response? I had understood it was in April.
I've got a May 2015 meeting on this list, but not a July 2015 meeting.
Right. I think when did we send it to you?
All right, I don't know. Let me ask my last question. We come
I
back. and maybe there'll be a
apologize.
second
We'll
round.
make sure that it's comprehensive.
Specific question that's more up to date and more timely. This week, GE announced that they may have to move jobs out of this country because they're trying to bid on a job in Indonesia with a state-owned enterprise. I've received the bid request from the Indonesian power company, and it specifically requires that PLN shall finance using 30% equity, 70% debt. An export credit agency shall cover at least 50% of the debt of the financing. It goes on to say the government of Indonesia won't guarantee the loan. Has Treasury ever talked to other members of the OECD, other working groups that you have, about getting rid of these sorts of requirements in their state-owned bid requests?
Not specifically on that issue, but we've worked, and I've spoken to senior officials in India about increasing their dialogue and participation in the International Working Group, which is designed to extend these export credit rules in the OECD to the emerging markets, and would thus have the effect that you articulate.
I appreciate the patience. Why do you think that a state-owned company would require
Gentleman's time.
your export credit financing as part of their bid request?
Oh, my understanding
cheaper,
is
isn't
that
it?
they're doing it because it creates jobs in their economy.
But why are they requiring export credit participation in their financing? It's cheaper, isn't it, than private financing?
I would think in India it is, and we're trying to bring them into the system of export credits that have
Gentleman's
existed in the OECD
has
through our work in the IWG.
I appreciate the patience. Thank you, Mr. Chairman.
Just a quick announcement. They have called votes a few minutes ago. We are going to grant a question period for Mr. Foster. We have 3 votes, and expect that will probably take about 30 minutes. So what we would like to do after Mr. Foster's, we would like to take a short break and then have us reconvene approximately 30 minutes after that. So immediately after that final vote, if you could please cast your vote and then get back here, I'd appreciate that. So with that, gentleman from Illinois is recognized for 5 minutes.
Well, thank you, Dr. Sheets. And first, I'd like to heartily endorse your support of the IMF. The point that you made about the benefits to the United States regarding the IMF's role in mitigating the 2010 Eurozone crisis were exactly on point. When U.S. markets dropped by $2 trillion, the average American lost $6,000, which, at least to my constituents, is not a small amount of money. And I'd like to add also that those who bemoan what they call the lack of U.S. leadership around the world and then take positions that directly undercut that, like opposing the IMF quota and governance reforms, really could benefit from a healthy reexamination of their logic. Now, this is my question here. In the debate over the Trade Promotion Authority, I expressed my concerns that any free trade agreement that did not address currency manipulation would allow one of our trade partners to improve its own balance of trade by manipulating its currency to make its exports cheaper and its imports more expensive. And I was disappointed that the TPA ultimately contained only a best efforts clause as a negotiating objective. Now, one of the principal, perhaps the principal objection that we heard from the administration to stronger language was that it would preclude our own domestic monetary policy practices, such as quantitative easing. But I actually disagree with this. I think that there are tests that many have delineated, including Dr. Bergson's work at the Peterson Institute, that provided a very clear framework for applying the IMF requirement of intent while providing for short-term domestic intervention. Those criteria are First, did the nation have foreign exchange reserves greater than 6 months of good and services imports? Secondly, did the foreign exchange reserves grow rapidly over the period in question? And thirdly, was the current account in significant surplus relative to the GDP over that period? Those seem to me like workable criteria that could and should be included. And so my question to you is simply, do you believe that quantitative easing, as we exercised it during the crisis and in its aftermath, would have failed these criteria? What would have prevented, if those were the criteria, what would have gone wrong in regards to the quantitative easing and other monetary policy?
So as a matter of fact, in the WTO discussions, there were assertions from some emerging market economies that quantitative easing policies were currency manipulation, notwithstanding the fact that it was carefully constructed and delineated toward achieving the Federal Reserve's dual mandate. So I think that is a meaningful risk. I think there are other risks as well, in that having...
Now, the risk you're referring to is that other people would complain about, other countries would complain about it, or that we'd set up objective criteria and then find that we chafed under those objective criteria?
And then it would potentially bring it into trade adjudication channels that could be difficult.
But if, for example, they were the three criteria that Dr. Bergsten has outlined, if those were the criteria, would anything have gone wrong? Would there have been any case in any court for, it seems to me pretty clear that we would have been far from being out of compliance of those, and that there would have been no problem.
It's hard to speculate as to how that might have proceeded, but certainly it's a risk factor. Similarly, having the U.S. behave in a unilateral fashion in terms of enforceable currencies, I think would create increased uncertainties in global financial markets and also damage our bilateral relationships. So, the Treasury and the administration are firmly opposed to countries doing anything that approaches currency manipulation. We just feel pretty strongly that there are other mechanisms that are better to respond than enforceable currency provisions.
Do you believe that any of these have been effective? I mean, that's the question. I mean, if I look over the last 15 years, it seems to me that China has gotten away, and other countries have gotten away with murder. And, as someone who represents an area with a strong manufacturing base that's been gutted for no good reason, I actually question the fact that we have not had effective response to currency manipulation.
So when I look at the global economy today, my sense is that the mechanisms that we're using through bilateral engagement, this is the leading issue that we talk about when we sit down with our international counterparts, through the G7 and the G20, where we just reiterated strong language in terms of how countries should manage their exchange rates, is powerful. And consistent with that, over the last 5 years, we've seen a very substantial real appreciation of the Chinese currency. So I think that these mechanisms are powerful, and we're working to bolster and to do more. As I said, we are foursquare against anything that smacks of currency manipulation, and are ready to proceed vigorously on that front.
Okay, well, I remain to be convinced of its effectiveness. Well, thank you.
Gentleman's time has expired. With that, we will be taking a short recess and reconvene immediately following votes, which, for information and all the members' awareness, we expect to be about 30 minutes. So with that, we are at recess.
a freely usable condition. The Chinese have taken some steps over the last 6 to 12 months.
No, I'm just asking for your opinion. Are they not ready? Is that currency fit the requirements, and will we support that, or will we, the U.S., not support it?
So my bottom line is that the IMF technical staff are engaged in a review to determine whether or not the Chinese currency satisfies those conditions.
And basically, then the administration's not going to go into this with an opinion. You're going to rely on the IMF staff and whatever they say, yes or no.
Well, we are going to wait for that technical review to conclude, and based on that review and broader judgment, we will decide, whether or not to support this
Okay.
in the IMF Executive Board.
Thank you. Now, in response to Ms. Moore, you had talked about the other nations having some judgment on our unwillingness or inability to convey some approval of the reforms. And then in response, you said that that has been one of the reasons that a couple of other banks have formed, worldwide banks have formed in other. So my opinion is, and it may be incorrect, but is that those currencies formed as we were deeply engaged in quantitative easing, and the comments that those countries were making is that you continue to print or create currency out of thin air, and we're not going to stand for it. We're going to start trading in something other than dollars. So is that a valid point of view? It's not reflected in your testimony, but is it a valid point of view that it was not simply a response to our unwillingness to act on the reforms?
I think that there are a number of factors at work that have motivated the advent of the new development bank and the AIIB. As I said, I think one of them is an element of frustration in terms of having sufficient voice in the existing institutions, particularly the IMF, and this governance reform would have been an important part and will be, once approved, an important step toward improving the voice and governance of the IMF.
So one of the comments that you make is that China needs to be more market-oriented, and market-oriented is too big to fail policy market-oriented?
My sense is that both here in the United States and within the context of the FSB, we have worked vigorously to end too big to fail.
No, I didn't ask.
So I don't know whether or not
I
it's
appreciate that you're trying to
market
stop it.
determined.
I'm just asking a plain question: is it market-oriented? It doesn't seem to me, but again, you may have a different opinion. I'm willing to hear it, but I'm not so far, and I'm running out of time.
Yeah.
I guess the
So it is
accompanying question with that is quantitative easing market-oriented, and so we're holding China to standards that we're not willing to hold ourselves to, and I think that's an alarming thing. I see I'm about out of time, but you can spend the rest of the time answering. Thank you.
Yeah. So in both instances, I would characterize it as economic policy. Monetary policy on the one hand, and efforts to achieve and pursue financial stability on the other. That said, as I indicated, both the FSB internationally and domestically here at home, we've worked to end too big to fail.
Thank you, Mr. Chairman. Appreciate it, Mr. Secretary.
Gentleman's time has expired. And with that, we will go to Mr. Schweikert of Arizona for 5 minutes.
Thank you, Mr. Chairman, Doctor. Sort of a little follow-up, but maybe with a slightly different angle. I think actually in this very room before the remodel a few years ago, we were talking about how frustrated we were with China not making its currency subject to market forces, the artificial peg, undervaluing. So in some ways, isn't the movement right now what we've been demanding of China? And the fact of the matter is the slide in their currency value as they were starting to expand, well, let's call it expanding the peg, it's an easier way to understand. Also, the fact that market forces now are actually looking at the realities of the Chinese economy, foreign currency reserves, other than just the data put out by China.
So as you say, certain elements of this recent reform do make the Chinese renminbi more market-oriented and more market-determined. As I emphasized, along with that, they need to be more transparent. Another comment that I think is very important is, given some of the uncertainties about the Chinese economy and ongoing capital outflows, we have seen some downward pressure on the renminbi. And it's imperative that when those pressures shift, that the Chinese allow the exchange rate to appreciate. So in order to be flexible, it needs to be flexible in both directions.
Well, within that, won't the Chinese economy in some ways be punished because they don't provide enough information? They're thought to step in and engage in intervention, and that's actually part of my next question. But they're going to pay a risk premium, for currency traders because of the lack of sunshine, the lack of honest data, and the fear that they're going to intervene on either side of the up or down.
I feel that the lack of transparency about the policies that they pursued created additional uncertainty about the outlook for the Chinese economy, which very much, as you say, would manifest itself in Chinese financial markets and perhaps to some extent redound back into weaker economic growth for China.
But ultimately, would you or not agree, a true market-sensitive, let's call it floating, currency coming out of China would be good for the United States?
Yes.
Okay. Second thing, in our own sovereign debt situation, I have a personal fixation, and coming very soon, if we do not demonstrate to the world, here's our debt management plan to get through the reality, the 30, 40-year demographic bubble, baby boomers as they're retiring, we need to be telling the world how we're going to manage this skyrocketing debt that, as we saw congressional budget in their documents say 2018, it's game on, the debt starts to explode. For the protection of the value of U.S. currency, for the protection of the value of our currency as being sort of the benchmark, do we not have to telegraph to the world, here's our debt management plan? I have ideas of long-term bonds, a couple other more technical things, at least to telegraph that we're taking this seriously, because right now, this administration has not been taking it seriously. And I know that's hard because you work there, but am I wrong that we're going to have to start telegraphing to the world our debt management future?
I need to defer to my colleagues, including the Secretary, on issues related to debt management. That's not part of my portfolio. But certainly it is also the case that having confidence in U.S. policy and confidence in U.S. securities is a critical input
Well, it comes
for
right
there
up
to be
against
confidence
your area,
in the U.S.
especially.
dollar.
And in the last 50-some seconds, as we're also working on our relationships in regards to money-moving currencies, how much fixation do you see in the countries you deal with on also eliminating bad actors from using our infrastructure? Concern many of us, I think even the chairman, have discussed of SWIFT and others of our financial backbone being used by, whether it be Iran, whether it be drug cartels, or just bad actors. How often does that come up in your conversations with our...
This is a crucial issue that manifests itself in the so-called de-risking and correspondent banking discussions, and also in discussions associated with remittance flows. And I think there are two core objectives that we're working to achieve, and in some sense to balance. On the one hand, to ensure the ongoing efficiency of the financial system and protect the ability of the financial system to effectively intermediate and for flows to move from one part of the system to the other. On the other hand, it's imperative that we protect the soundness, the integrity, and make sure that it's not abused by bad actors.
Doctor, we've gone over time. Thank you, Mr. Chairman.
Gentleman's time has expired. With that, we will go to the gentleman from Minnesota, Mr. Emmer, for 5 minutes.
Thank you, Mr. Chair, and thank you to the Undersecretary for being here today. Just some insurance questions, I guess, first. With regard to all international insurance regulatory standards, but especially capital standards, including the higher loss absorbency, HLA, do you support requiring international bodies to wait until the U.S. has established its standards and then insist that the U.S. standard be recognized as at least one way to comply?
I see the ongoing work on international standards for insurance as being constructive. It helps achieve financial stability and a level global playing field. So I think having that work ongoing is constructive and useful. However, it's also important that I emphasize that these international groups that are doing this work, like the IAIS, which includes our insurance regulators, that the international groups do not have authority, they do not have any jurisdiction within the United States. So they make recommendations and then are, depending on which part of the code it is, either the Federal Reserve in its role is looking after systemic institutions, or the state insurance regulators would make a decision about how and in what way they're going to implement these international recommendations.
Speaking of the IAIS, the organization recently voted to shut out observers, including U.S. industry and consumer representatives, from its working group meetings. Are Treasury representatives working to reopen those meetings? And how about with regard to the closed-door meetings of the Financial Stability Board? Same question.
So we are represented, the Treasury is represented in the IAIS, the Federal Insurance Office, and state regulators are also are represented in the IAIS.
And I hate to interrupt, but it's limited time. Are you working to open those meetings to the industry and consumer representatives?
We are working to make those institutions as transparent as possible, including releasing documents and explanations and so on and so forth. And we see that as being a very constructive step toward increased transparency.
Is that a yes, Mr. Undersecretary? Yes, you are working. I understand you're trying to make it more open, transparent.
We are working to get to a similar outcome, but we're taking a somewhat different route than the one you just articulated.
Okay. The IMF issued a report in July criticizing the United States for the way its state insurance regulators are designated or elected, and calling for a national insurance regulatory body. To what extent did Treasury provide resources for this report, and does the Treasury agree with those comments?
So I am not aware of the extent to which we were involved in commenting on this. Certainly the IMF is an independent body, and the IMF does independent research, so it would not be the case that anything they said would perforce have a ratification from the U.S. Treasury. The recommendations there are the IMF's, they're not the U.S. Treasury's.
All right. Would the Treasury support the termination of the FSAP reviews of the U.S. insurance regulatory system?
We just went through one of those FSAPs. It is a very resource-intensive proposition for insurance in the sector more broadly. My instinct is the FSAP it occurs once every 5 years, is probably a useful exercise for all of us to go through.
To what extent does the Treasury conduct cost-benefit analyses with regard to positions it takes on insurance regulatory issues in international bodies?
We are always analyzing pros and cons, costs and benefits. I'm not sure that I have a formal document that I can generate. But another important point is that as these international frameworks are developed, once they move to the point of actually being implemented by state regulators and by the Federal Reserve and others, there will at that point be more detailed cost-benefit and impact analysis that will be done.
Thank you. Very quickly, in the seconds left, changing course, what, if any, role is the Treasury Department playing in coordination with the State Department in the Cuba Steering Committee to normalize banking relationships with Cuba? As I understand it, to date, only one bank has a relationship in Cuba, and I want to know what the Treasury is doing.
Let me get back to you on that. As far as I know, we have no formal role on that group, but I'd want to check that.
Thank you. I yield back.
Gentleman's time has expired. With that, we will go to the gentleman from North Carolina, Mr. Pittenger, for 5 minutes.
Thank you, Mr. Chairman. Secretary Sheets, Regarding the snapback provisions, it's my understanding that there's, the Europeans are going in flocks right now to Iran. Their trade ministers and various individuals looking for agreements with Iran. Is it reasonable to assume that snapback provisions will really be, at that time, at that period of time, something that we could expect, given China and Russia and, you know, the world has changed and there are clear reluctance, it seems to me, to join in. It seems that there's been a lot of communication that we'll just go into snapback, but is that really likely? Wouldn't you agree that this is really not something we should be believing that this will occur?
Those issues related to Iran sanctions are outside of my purview
Okay.
as the Undersecretary for International Affairs, and I should defer to the Secretary and to Acting Undersecretary Zubin. I very much apologize for that, but I
All right,
should be
let's
careful.
talk about the IMF systemic exemption. Could you enlighten us where the administration stands with that? The IMF, the systemic exemption that there's been some discussion about?
Yes. And what about the systemic
Well, there's been a lot of mixed signals from the administration about it. I'd just like some clarification on it.
Yes, okay. So my sense is that the systemic exemption was put into place in response to significant economic and financial risks in 2010. Had we pressed forward with debt restructuring of those peripherals at that point, there would have been a significant risk of contagion at a point when the global economy was just starting to recover from 2008, 2009. That said, I also recognize that there is an ongoing conversation, an animated conversation going on about this inside the IMF, and we are open to various ideas. One is to further specify criteria that would need to be satisfied in the event of the systemic exemption, but there are other ideas, and as I mentioned to Chairman Huizinga, be very happy to work with you and your staffs on this issue going forward. It's a very, very important issue.
It certainly is. Would you be able to address some issues related to terrorism financing? You know, there's 46 banks in Iran that will come under SWIFT authority, the transfer of funds, and certainly it should be of concern to all of us. The $100 billion that will be received by Iran from repatriated oil profits and how that money could be processed through the international financial system. And what efforts are being made right now through the Treasury, FinCEN, and other departments to track this money?
Again, I have to defer those questions to my colleagues. I very much apologize for that.
Okay. I yield back.
Gentleman yields back. With that, we are, you need a minute, all right? Well, Mr. Heck, then, if that is all right, we're going to go to our side, and then we'll come to your side. With that, we will recognize the gentleman from Indiana, Mr. Stutzman, for 5 minutes.
Thank you, Mr. Chairman, and thank you, Mr. Sheets, for being here. Want to talk a little bit about what's going on in the Middle East. Do you support sanctions relief for individuals and groups known to sponsor terrorism?
Again, I think it's necessary for me to defer those questions to my colleagues. I apologize.
Who would those colleagues be?
Secretary Liu, and then Acting Undersecretary Adam Zubin, who had his confirmation hearing today, would be the two principals, and then Undersecretary Zubin, Acting Undersecretary Zubin's staff. It's in the TFI cone of the Treasury.
Okay, can you talk a little bit then about the new financing options that they will have as a result of the Iran deal?
Similar. I regretfully cannot answer that.
Okay, all right. Let's talk about the TPP then a bit. Could you give us an update on TPP and how the negotiations are going? Interested in your take.
Absolutely, thank you. I see TPP as being enormously important for the U.S. economy. It links our economy and our firms to the fastest growing region in the world and many rapidly growing countries. But moreover, it establishes rules of the road for international trade that emphasize transparency and openness, and rules of the road where U.S. firms will be able to compete fairly and I think flourish. The negotiations met with a fair amount of success and progress during the negotiations in late July. The USTR and our international counterparts are working vigorously to get this agreement concluded as soon as possible. I don't think we have any imminent specific date in which will be concluded, but I think it soon we'll be at a place where it'll be will be done.
Do you are you hearing any reluctance from countries in the negotiations related to ag products or automobiles, medical device industry that it would affect? Are you hearing anything as far as is related to those three?
I think that those are ongoing issues where various of our counterparties in TPP would have, several of those issues that would be open and concerned. But that's where the negotiations are at this stage.
Can you share what their concerns would be thus far?
Our work has been more in the financial sector specifically, but for Japan, it's autos and ag. For New Zealand, say, it's dairy. For Canada, it's agriculture. See that those are some examples of ongoing issues.
How about manufacturing? Anything that you know of related to manufacturing?
Over and above the issues on autos, I haven't heard as much about manufacturing.
Okay. What about autos? What are you hearing on autos?
Well, of course, that's that's an ongoing issue of discussion with the Japanese.
Okay. All right. Could you talk quickly about Ukraine and the concern that we have about foreign aid falling into the wrong hands? So
I think what's happening in Ukraine over the last 18 months is truly extraordinary. That on the one hand, there have been enormous stresses there as a result of the security situation. On the other hand, we've seen the government move forward with a vigorous reform program that has put in place many of the kinds of things that the international community, the fund, has been asking the Ukrainians to do for several decades. As a result of the vigor of this program, the IMF has provided support, the international partners have provided support, and the situation in Ukraine appears like it might be approaching a point of stability. I should finally note that an important tier of the reform program is an anti-corruption drive, where they are working to make the government more reliable and trustworthy in a number of different dimensions.
Okay, thank you. I'll yield back.
Gentleman's time has expired. With that, we will go to Mr. Heck from Washington State for 5 minutes.
Thank you, Mr. Chair. Mr. Sheets, thanks very much for being here. I think we're party to at least 3 agreements that affect our biggest export industry, namely aircraft sales. The OECD agreement, the aircraft sector understanding, and the home market agreement between us and the Airbus country, which says we won't provide export credit sales, we won't provide export credit on sales into each other's countries. As I understand it, however, there are no enforcement mechanisms on any of these. They're so-called gentlemen's agreements. But it's always seemed to me that there's also no incentive to cheat, because everyone has export credit agencies, or did, and anyone who cheats and provides subsidies would suddenly find other countries providing subsidies in response. But now that we don't have an export credit agency, it seems like we lack this ability. If the Airbus countries want to provide deeply discounted export credit to sell planes into the U.S., sir, do we have any tools to stop them and protect American jobs now that we've shut down our export credit agency?
So I broadly agree with the argument you made that by not having an XM bank, we have much less leverage in our discussions and our interactions with the rest of the world on issues with respect to export credits. And specifically, as this body knows well, the Treasury has a mandate to take steps globally to reduce with an eye toward eliminating export credits. But it's very difficult to do it if we don't have any leverage in those discussions.
Do we have any tools to deter or disincentivize their export credit agencies deeply discounting now that we have no direct retaliatory entity or potentially retaliatory entity?
We are very much dependent on our argumentation and our relationships, but the direct tool that we would use is now gone.
Unless you disagree, I will conclude that you have just indicated that we are being put at a competitive disadvantage. I want to change to IMF. I'm curious as to whether you know whether U.S. cooperation with the Asian Infrastructure Investment Bank will be discussed with President Xi during his upcoming visits, and what possible forms of cooperation that might take.
I'm not sure what exactly is on the agenda, but I can say that in our bilateral discussions with the Chinese, the functioning of the AIIB is one of the issues that we discuss. And we take that opportunity very much to underscore that for the AIIB to contribute constructively to the global environment, it needs to operate according to the best practices that have been established by the multilateral development banks over the last 70 years for issues of governance and transparency and environment and social inclusion and so on and so forth. And these are points we make repeatedly, and I think these are points that we have some evidence to believe that the Chinese are starting to hear. Based on the documents that this institution is generating.
Do you think there's any reason to believe that failure to adopt IMF reform may have contributed directly, indirectly, materially, or immaterially to the creation of AIIB and the BRICS Bank?
I do think that was a factor, that these emerging market economies wanted greater voice in the international institutions, in the international architecture. And the 2010 quota reforms gives them that larger voice. But without it, they're left to seek opportunities to have an impact through other mechanisms, including through the creation of these new institutions.
What further consequences might there be if America fails to embrace the otherwise broadly recommended reforms? How else might we be disadvantaging ourselves in terms of an ability to provide a leadership role?
My sense is that a strong IMF that is led meaningfully by the United States is very much in U.S. economic and national security interests. And to the extent that we are not leading, then the IMF is going to go in other directions. And it's imperative. The world looks for our voice, and it's an opportunity for us to take steps to ensure that the IMF is moving in directions that we see as being most compatible with global economic, financial stability and other considerations that we have.
Thank you, sir.
Gentleman's time has expired, and again, my apologies for that little delay. We would have loved to have been able to do a second round, but I know you had a target time of about 4 o'clock, and we want to be respectful of that. So I would like to thank our witness today for his testimony, and without objection, all members will have 5 legislative days within which to submit additional written questions for the witness to the chair, and then I will then forward them on to the witness for your response. I ask our witness to please respond as promptly as you are able. I know I have a couple of questions that I will be following up with personally as well. So without objection, all members will have 5 legislative days within which to submit extraneous materials to the chair for inclusion in the record as well. And with that, this hearing is adjourned.
Thank you.